The broadcast is now starting. All attendees are in listen-only mode.
Good day, everyone, and welcome to my live trading masterclass from where I'm going to show you a professional trading system that creates consistently accurate trading signals that, in my opinion, has no equals. So welcome everybody. It's good to see. I see we're still got people signing in. It is great to see so many people in the room. I think I will continue. I know people are signing in. Let me just tell you, if you have any questions during this webinar, you can answer them at the time. If I do not immediately answer the questions that you have, please, I will come back to them, guaranteed for sure. Okay. So before I start, can I just check with everybody that you can see me and you can see my screen and hear my voice, please? Thank you. Yes, Celia, Tom, Paul, good. Roman, sorry, I think I pronounced that wrong. Yes, Simon, David, good. Cynthia, Rosemary, good. Look, thank you all very much. It means that usually when there's one, everybody can see me. So that's great. Right, let's get started. So I'm going to show you during this masterclass the methodology from which I use myself, and a methodology, as it says on the slide here, that creates consistently accurate trading signals. That, in my humble opinion, as I've already said, has no equals. And it works. The key thing here I want to tell you, it works no matter the instrument that you're trading. In other words, if you're trading foreign exchange, Forex, if you're trading commodities, such as crude oil or gold, it works in stock indices such as the FTSE, the S&P, the Dow Jones, DAX. And again, if it's just pure and simple stocks, or same methodology, not different strategies, the one strategy we use across the board. And again, it's highly effective no matter the time frame. So therefore, that means that it suits all styles of trader, whether you're a day trader, whether you're a scalper, whether you're a swing trader, in other words, a trader that likes holding positions overnight, if you can, if the signals continues to be there, etc., etc. So it works across all time frames. So just before we continue, please, I just want to show the disclaimer here because I have a legal right to show this. And please, although I am showing you on an education basis, that our methodology, it is not me enticing you to trade in any makeshift way or any form at all. Okay, so I mean, there are a number of points here, but I just want to make that very, very clear. I am not enticing you to trade. You have to make your own decisions. I'm just showing you through an education process a way from which that if you follow this, that you can create trading success for yourself. So I'm going to show you on this presentation exactly how to achieve trading success. Okay, now what I do want to say, and a question that you may have already for me, is what gives me the authority to make such a statement about a trading system that will create trading success for you? Of course, I say a trading success for you, subject to you following the rules. Okay, let me tell you that. But what gives me the authority? So on that basis, I think I need to tell you a little bit about me. Right now, my name is Ian Foster, and I am the founder and lead educator of BeAWinningTrader.com. I myself am a trader, and I've been trading the financial markets since the early 1980s. So, I mean, when I say close to 40 years, I'm probably telling a little bit of a fib. I would say it's 40 years. I'm probably trying to keep my age back a little bit, okay? And what gave me the bug was probably my very first trade on a penny share that I knew absolutely nothing about, taking advice from if you want to call it a tip, from a fellow business associate that I knew in Northern Ireland, which is where I'm from. And I made between the Monday and the Wednesday £2,000. And of course, now, bang, Ian thought that I'm going to make myself a millionaire in a very, very, very short space of time. But what it did do, that didn't happen, by the way. But what it did do, it gave me, I had the trading bug. And unfortunately, unfortunately 1987, the stock market crash came and I was caught in the middle of it and I lost money, and some shares I had to sell and other shares I decided to keep, which I had to keep for quite a few years before they came back to the previous levels that they were at, my entry points, etc. But I did do that. But as I've said, I had the trading bug, and then during that period of time, I had gathered further knowledge, and that further knowledge was trying to trade the derivatives markets, such as the options and futures markets. Because going back then, we hadn't the retail opportunity of trading the Forex, or in the UK here, having our spread betting companies, etc., etc. So the derivatives markets were purely off the exchange when the contracts were pretty high in value per point, etc., etc. And it was at that stage then that I realized that I was going to have to learn an awful lot more in relation to me creating my own trading decisions. Prior to that, I was able to read papers. I was able to read, take opinions from this person or that person and say, oh, this is a good stock, or that's a good stock, or this is cheap and this should go back to there. But by golly gracious, when you're starting to trade derivatives, whether that be options or futures or any other thing, commodities, you need to have your own methodology that is going to indicate you and give you signals that are based on probabilities. So it was with this knowledge then that my search began. And it was a challenging search, let me tell you, very much so. It was challenging. The internet was in its infancy. So therefore, it meant that anything that I was trying to learn was, attending seminars, so physical seminars. And as informative as these were, I came away on each occasion from the seminars of having learned something, but not having learned what I needed to learn. And that was a way from which I could actually make my own trading decisions. In other words, a method that would indicate if there was a greater probability of an asset or an instrument rising or falling. Okay, so it took me some time to find such a method, and in fact, I was close to giving up because I'm one of those people that very much probably hesitate when it comes to paper trading. I much rather try to do a little bit of trading as small as I can, but in those days you couldn't trade that small. It was the smallest was either one contract, and which was quite large. So trying to earn whilst I learned was, let me tell you, challenging, and it was certainly costing me money. But suppose you could say determination, or maybe a better word might be stubbornness, because I'm told I'm quite a stubborn person. But anyway, stubbornness, I eventually found exactly what I was looking for. And I can honestly say that I was a struggling trader. A struggling trader I was until I began using this method. And once I started to get to grips with this method, it started to begin, I started the process of turning my trading fortunes around. Now, you may ask what made me start teaching and mentoring, because I've been teaching and mentoring since 1998. Yes, I have. But the reason that I started teaching and mentoring was because once I was learning and had started to learn this methodology, and the methodology that had now started to turn my trading fortunes around, then I knew it was also going to be beneficial to others. So as I've said, this was way back in 1998 when I started doing my first seminars myself. So I'm on my 25th year of teaching and mentoring. Now, over those years, I have developed in my way a trading system that I call my trading system, with a particular set of rules, and then I have perfected that over the years. And now we've got this last number of years what we call the finished article. Okay, and of course, is it always going to work? Absolutely not. Of course, there's no such thing in inverted commas we call the Holy Grail. In other words, that it's going to work all the time. It's not. But it's a methodology that is so powerful because it gives consistently accurate trading signals. And most importantly, it will let us know the risk. So let me just tell you a little bit about the system. All right. So we get exact entry points, no gray areas. Boom. Exact entry points. You get low risk trades where the risk is always known at the time of trade entry. As I've said, not only the entry points, it will let us know the initial risk at the time of trade entry. And it works no matter what we're trading. We could be trading Forex, we could be trading the indices, we could be trading gold, trading crude oils, stocks, etc. So that's good. That's good. Okay. And it is effective across all time frames. So as I've already said at the very beginning of my presentation here, that means that it accommodates all styles of trader. And if you have been trading and you've been struggling, you know, and you may say, oh, I don't like trading only in this particular time frame or that particular. Once you get to learn this methodology, you may, which has happened on many, many, many occasions, you may all of a sudden say, I think this is going to suit me better on this particular time frame or in this style of trading, etc., etc. Or again, everybody, if you're completely new and you've never traded before and you want to get into this amazing game, then you're going to have this choice yourself. It's a great choice, and you're going to have a totally open mind and really have a real good understanding of learning a professional system that gives you all of these points here. And as it says towards the bottom of the slide here, it's got great timing characteristics. As a trader, we want to go through little pain. You may ask, what is little pain? Well, if we buy a particular share or buy a particular Forex pair, okay, so we might think that the pound, the British pound, is going to go stronger against the US dollar. So we decide to buy that. And again, if that market then doesn't work out for us and it starts falling, in other words, we're losing money, we want to keep those losses as small as possible. And we want to go through as little pain. We don't want to let those losses get bigger and bigger and bigger and bigger. And now we're starting to pray. Now we're starting to hope. Now we're starting to look for every news item that there possibly is to help turn this scenario or the situation around. We don't want that. So that is what we call pain in the trading business. Okay, so we want little pain. And most importantly, it is not complicated. Now, there is some learning to it, and if there wasn't any learning to it, there'd be no point you even watching this presentation or me demonstrating to you our methodology on this presentation. Okay, so the trading systems foundations are all based around understanding price action, and the key word here is price action correctly. Okay, analyzing price action correctly. And sometimes I'd be in despair when I see people talking about price action and the way they try to explain it. And it is, to say the least, perhaps not that good. Okay, that's all I will say. So what is price action? So my definition of price action is that it is a technical method to determine the next likely direction of a market by correctly understanding recent and past price movements. And the key thing when you use price action in your analysis, it is not lagging. And being able to understand it correctly creates an edge. Okay, that's what it means. And the great thing, as I say here, is that it is not lagging. In other words, it's not behind price. So many of our indicators, unfortunately, folks, are a little bit lagging because they're taking their information from price. But if you can read and analyze price correctly, then it means that you're reading the market at this moment. Okay, that is what's prayer. So my system, let me get into it. And I see I have no questions yet. Good, 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 good. Maybe I hope I'm not talking too quick, but again, I'm aware that we want to get to the points. There's no point going on to a trading webinar, folk, or a trading masterclass and starting to diverse into this or into that and the other. We want to get to the point. You want to learn what I am going to talk about, and you're wanting to do this because you want to actually be able to use a methodology and system that's going to create success for you. So as I say here, it's a system that has got two components. Step one is learning how to determine the price action trend. So I have a very distinct set of rules that teaches me the price action trend. And this is the trend no matter the time frame that I am looking at, no matter the instrument that I am trading. You, once you learn this, would be able to determine the trend, not based on trend lines, not based on drawing lines in your chart, not based on a market being above a moving average, but on pure price. And that means then when we know the trend, the confirmed trend, we also know when that trend breaks, in other words, when it changes. And that's what we need to know, because if we're trading the trend, which is what we want to do, then we want to also know when that trend is finished. And step two is using our proprietary software trading tool to further confirm the price action trend signal. And this gives us an edge. Now, I will tell you what our price action trading tool is. I will show it to you, and you will be very, very excited to see how effective it is and how it simplifies the trading process, but not only simplifies it, as it says at the bottom of the slide here, it gives us the edge. So let me show you how to begin your trading journey using price action. Firstly, I want to tell you about the two main types of price bar. And the two main types of price bars that the traders look at, there are numerous different types now in the market, but the two main types are the open, high, low, close bars, OHLC, or the candlestick charts. Now, the candlestick charts are probably in modern times more regularly used in comparison to the OHLC bars, okay? But let me just explain to you now the difference. So this chart here, this bar on the left here is an open, high, low, close chart. And let me tell you what that is. Let us assume that this is a daily bar. The low of that would be the low price during the day of that particular instrument. And the top of that is the high price. The little horizontal line to the left is the opening price, and the little horizontal line to the right is the closing price. And that is an OHLC bar, or if you hear it, an open, high, low, close bar chart. That's what it will consist of. Bars, just like that. If you're looking at candlestick charts, then it's to the right here. And the difference is it's got the exact same information. So it has. Because this wick up here is the high price. The wick of the candle down here is the low price, exactly the same as the OHLC chart. But there's a difference in the candlestick chart. You've either got an open body or a closed body. An open body is when the close of that particular bar, again, let's assume it's a daily bar, when that close is higher than the open. And a closed body candlestick chart is telling us the complete opposite, that it is closed lower than the open. But this chart here, believe it or not, for my analysis and the way I teach my methodology, gives me more information. Because what I am more interested in is where the close is in relation to the high or low of that particular bar. And I can see that much better in an OHLC bar chart. And why I'm more interested in the close is because the close is the most recent price, no matter whether we're talking about a 1 minute chart, a monthly chart, a yearly chart, a daily chart. So again, let's assume this is a daily chart. And as I'm based in the UK, let me assume that this represents the FTSE 100 index. The opening price is the price that the market opened at 8 a.m. UK time in the morning. And the closing price is the price of 4:30 p.m. in the afternoon UK time. So therefore, this is the oldest price and this is the most recent price. So what determines the power and the strength of analyzing one single bar is where the close is, as I've said, in relation to the high. If it closes closer to the high, it is what we call a bullish bar. If it closes closer to the low, it is a bearish bar. Okay, so as I've said, all my analysis done in the OHLC charts, and a bullish bar closes closer to the high. What that is telling me is that there is a much greater probability that that particular instrument, that bar represents, breaking to the upside and taking the high of this bullish bar out to the upside before it takes the low out. If we have a bearish bar, as you can see, the close here is closer to the low than it is to the high. Therefore, there's greater selling pressure in that market, and that is telling me the exact opposite, that the low of this market should be broken first before the high. Now, how do I know, if it's sort of sitting in the middle? Well, all we do is we get what we call the mean or the mid price of the bar, and we very simply add the low price and the high price, and we divide by 2. So if the low price was 100, the high price was 200, that's 300, divided by 2 is 150. If this bar closes above 150, it's a bullish bar. If it closes below 150, it's a bearish bar. It's as simple as that. And this is correctly how to analyze a single bar. Now, there's much more to successful trading than analyze a single price bar, folk, but let me tell you, it is one excellent starting point. That is what it is, 100% for sure. Now, what you can often find, and again, excuse me, I want to do here is assume again that these are daily bars. If this is our daily open, high, low, close, you may get a market that may trade a number of bars inside this bullish bar, and it may go down to near the lows of this bar. And for somebody without the knowledge that I'm after sharing and I'm further sharing, they would perhaps be saying, oh, this market looks weak. But if this was the case, all this is really doing for me is this is giving me an opportunity from which I'm looking to take a buy signal for the market to go up, because I know that the greater probabilities are for that high to be broken to the upside. But if this low is broken then and I'm looking to buy, then this is exactly where I know I need to have any protective stop. I need to have it underneath that low, because if that low is broken, again, it's like flipping a coin. It's turning a bullish situation, because this was a bullish bar, into a bearish situation. It's done what it shouldn't have done based on probabilities. And of course, the market can do that, folk. Of course it can. But by golly gracious, would I ever take a buy signal if I'm even trading on a 1-minute chart? Remember, I'm a trader, not just an educator. I'm a trader on a daily basis. Okay? No. Not even if I'm trading my futures markets on a 8 range chart, which I'm not even going into this presentation, in this masterclass, to tell you what an 8 range bar is, but it's not even a time bar. It's on pure price, and it can move very quickly. And if I trade like crude oil in an 8 range bar, I would still never take a buy signal on a bearish bar. In other words, a bearish bar where the close is closer to the low than the high. It would have to always be a buy signal, would have to be when the close is closer to the high than the low. And the bearish bar is exactly the same. The market may trade inside that for a couple of days, for a day, for half a day, whatever the case may be. But it's not until that high would be broken without that low being broken. And I'm going to show you examples how we use that. So that knowledge is good, says you. Yeah, you appreciate that. But is it any benefit to me? Is it going to help you in relation to your understanding of how to take trading signals in the marketplace? So let me just tell you. Excuse me. Here's a very recent chart of the dollar, the euro dollar, right? So in other words, the euro versus the US dollar. Okay, so if the euro is going to be stronger than the US dollar, price will go up. If the US dollar is going to be stronger than the euro, it'll bring the euro down. And because the euro is the very first EUR, is the euro, because that is the very first symbol in relation to this currency pair. This is a foreign exchange currency pair. That is the lead. That is the lead currency. And that means then that if you see the market going down, that's telling you that the US dollar is strong, stronger than the euro. If this market is going up like this, it's telling you that the euro is stronger than the US dollar. So looking back at analyzing a single bar, let's just see what this means. You see with a bullish bar, closer to the high than the low, high than the low, high, bullish bar, bullish bar, bullish bar. So it gets the whole move up here each day. This was indicating. So could you imagine just taking signals, if you wanted to, on a daily bar chart, an open, high, low, close bar chart, with this piece of knowledge, because you're based on probabilities, and you know at all times when you're wrong. If you've got a bullish daily bar, the only time that bar is wrong is when it breaks that low. Do you see then what this scenario is here? A bearish bar. A bearish bar, a small range bar here. Yeah, that's another bit of understanding. But like a low volatility bar, we call it a very bearish bar. And then in here, we got a bullish bar, from which you see the next day it couldn't break that to the upside. What's that indicating? If it fails, remember what I said, it's like the coin being flipped on its head, turns a bullish scenario into a bearish scenario. So once that low was broken when it should have been broken to the high first, excuse me for cough, I apologize, then that was a further indication of weakness. But what I want to point out is the exact thing that I said to yourself in relation to my previous chart example, that this market is a bullish bar, this is a bearish bar, and it can trade inside that bar, but the further it trades inside that bar without breaking that high is only giving me a further opportunity to look for sell signals. And if you take a look, this is just a very, very, very recent chart that in fact was taken yesterday. Today is the 17th, so I took this screenshot yesterday. And that there is a bearish bar the day before this last bar, but it was unable to take the high out. Quite a strong day, but it went within 8 points or 8 pips of taking the high of that daily bar out, and it started to come off. An intraday sell signal we had on the euro versus the dollar. And then more importantly, it has since come down because we know that the probabilities were in our favor, that low of this bar here to be broken to the downside. And just take a look, everybody. Take a look over this last couple of days in the euro dollar. Has it done that? And it has, I can tell you that. So that's the great knowledge of just analyzing a single bar. Excuse me. So trading with the confirmed price action trend, and then what I call using our smart spot to execute the trade entries. So as I said at the very beginning of the presentation, I have a set of scientific rules that determines when the price action trend is in place across all time frames. Remember what an uptrend is? It's higher highs and higher lows. And the downtrend is lower highs and lower lows. So let's take a look. Same thing here, folk. Exactly the same thing. What did we get? We got a buy signal. Why did we get a buy signal? Because remember, higher lows, higher highs, an uptrend. Lower lows, lower highs, a downtrend. Yes? So that low is a low. That was what we called a confirmed low based on my rule set, my scientific rule set. It was a confirmed low again. That was a confirmed high. If we get a low, we get a high, we get a low. Then we measure that low. Once that's in place and confirmed, and we know exactly where it's confirmed, not away up the page. We know at the exact time that that was confirmed. It was confirmed around here, folk, okay, based on our rule set. And that entry was at 0.9844. That was the exact closing price that confirmed that to be a higher low. If that's a higher low, then what do we want to do? We want to take a buy signal because it's a confirmed uptrend with the objective of always wanting to make higher highs. And that market continued to go up and down, a further higher low, further higher high, higher low, the whole way up. And again, from the October last year right until over the into December, into January, that market gave us a 1,000 pip move just on this understanding, using our rule set to determine the trend. We got in on the first trade on a bullish bar. We wouldn't take a buy signal on a bearish bar. It has to be a bullish bar, and that confirms that to be a higher low. We've two setups. I'll show you. We've got an A setup or a B setup that confirms these. That's all. But there's a little bit of learning to this. It's not just as simple. Some people call these swing highs and swing lows. Yes. Why I don't really call them swing highs and swing lows is not because they're not swing highs and swing lows. They are. But it's the rule set, my rule set, that has not been plucked out of thin air. I say it's a scientific rule set because it has been done over years and years and many thousands of hours of testing that proves when that particular A rule or that B rule is in place, then we have a greater probability that that market has changed trend and is going to either go on to an uptrend or a downtrend. That is why. And I'm going to show you in one of these slides, in a very recent slide, actually one that maybe was today, of where the market has not given us confirmed highs and lows, which, if you haven't that knowledge, you would assume were highs and lows. Okay. So the same thing if I go into the next chart. Pound dollar. Now we know that the pound last year, towards the autumn of last year, 2022, took an awful hammering. But again, that's fine. Well, it had already started to fall way down here by the time that the news were picking up on it. But you see, using our methodology, we knew very, very, very easily that the pound was in a downtrend. And it was in a downtrend up here. Why? Because that was a lower high than any high over here to the left. That was a confirmed lower high. And we got that sell signal at 120.54. That market went from 120.54, it went down, and then it gave us a little bounce here and gave us a further sell signal at 116.54. Okay, because that was a confirmed lower high, was confirmed in round here. And that market went down to 103.48. Now, I know that we're not ever going to get in at the bottom or right at the top. Okay, that will never happen. We're going to get in with the masses. So although that market went to 103.48, we didn't get out at 103.48 on the final position. Of course, we were trading a couple of positions, of which is part of the learning process of being successful. Then you're certainly, as the market's falling and falling and falling, because as much as we wanted to fall into oblivion, if we're short selling this market and hoping to buy it back lower, we know that there will always be a bottom in the market and there'll always be a top. The same in the housing market, folks. As much as we don't like it, our properties go up, the value goes up, and the value, unfortunately, we don't want it to stop, but it eventually stops and starts falling. Okay. So again, not only did we get the down move, but more importantly here, once we got a confirmed higher low here, we got the buy signal, and of course the pound, when they were still talking about the UK economy and this and that and other, technically speaking, we knew exactly what the trend was. We knew exactly where the trigger point, in the sense of the very first buy signal, was at 113.59, and that market again gave us a rally of which there was another 1,000 pips. So could you imagine, on the tail end of last year, using this methodology on a daily chart, you got well over 1,000 pips in the fall, and you got 1,000 pips on the move back up again. Quite amazing, I think. So have we any questions? Yes, let me just check. Right. No, the rule set to determine our price action trend, Joan, is exactly the same, no matter whether we're trading a smaller time frame or a larger time frame. And again, what a way to trade stocks. You're saying that you mainly trade stocks. What a way to trade stocks. You're not looking at moving averages. You're not looking at oscillators. You're not looking at RSIs or any of these technical stuff. You're looking at pure price action to determine the trend. And you know, you can put on a moving average if you wish, but you know when that market goes up and gives you a confirmed high and then comes back down again, gives you a confirmed higher low, and you know exact point that is qualified as a confirmed higher low, then you know where you should be buying that market. But not only do you know where you should be buying that market, you know where your stop should be. Because if we buy that market up here, once we get that confirmed at 113.59, we know that in round here, that there, once that market, if it would break the low, that means that we need to be out of that trade. Remember in one of the first few slides, I said we want little pain. We don't want that market going. We don't want to be buying that market here and then going through all this pain and then praying and being out, losing a lot of money. No, we want to keep our losses as small as we possibly can. Okay, so no other questions. Let me see. Yes, Paul. For options, whether you're trading foreign exchange, Forex, whether you're trading commodities, whether you're trading using this to trade options, just another tool, everybody. Those of you that don't know what options are, it's just another way of trading. You need a methodology that gives you directional indications. And this is what we have. Doesn't matter what you are trading. Doesn't matter. Here's the exact same rule set, folk. It doesn't change. We use the one strategy across everything. We don't have this strategy for this time of the morning and that strategy for the afternoon and this strategy for the Dow and this strategy for Forex, this strategy for, no, it's the same strategy across all. Okay, here's the Dow Jones, exactly the same, a 3,000 point rally, picked out in the higher low here, bar number 2 here, confirmed higher low here where the blue bar was here. That was a higher low than this low here, slightly higher. And you can see there that we got a confirmed entry at 36.96, market rallied. Now here's a very recent chart of the S&P, just a chart that was taken recently, but again, the S&P up until, our first buy signal was a double bottom down here, and the market rallied, gave us a confirmed higher low, then even conservative, it went up, made a higher high here than this high, came back down, gave us a confirmed higher low. We got a buy signal at 41.79, the market's rallied 400 points. That's the equivalent of about a 3,000 point move again. And this is only a very recent chart. Look, this started off in May if you're trading the daily charts, and this is into August. Okay, this is into, yesterday or the day before. And furthermore, we know exactly, it doesn't matter what Bloomberg's saying, it doesn't matter what this analyst is saying, CNBC. From a technical perspective, as we speak today, this market has to break 43.10, I think it's 43.10 or just above it, to the downside before the S&P's changed trend. Either that or the market falls further, and there's been a little bit of weakness in the indices, I know, this last day or two. And the market then rallies and comes up, and if it makes a lower high, we might get a lower high up here, because remember, if it comes down and makes a higher low than this low, it hasn't changed trend, folks. And then what would the objective be if we met a higher low? It would be to break and take out this high. If it's unable to do that and makes a lower high, and we've got a confirmed lower high, what's that indicating? That's then indicating a sell signal if we were using a daily time frame chart to trade from. So simplifying the trading decision process is what trading is all about. And it was always one of my missions. And let me explain to you that the mission that I accomplished when I developed my software trading tool means that you have got something very simple, something very powerful, and providing you can follow a traffic light system, then you will have no issues whatsoever in following my software trading tool. It's a visual indicator. So quite simply, it doesn't clutter your charts in any way, shape, or form. It will paint the price bars red, blue, or green, depending on weakness, strength, or neutrality, respectively. And then we use that in coupling that with our price action confirmed trend, and we have got the edge. So I call my software trading tool the STB Trend Trader tool. And again, it was first and foremost developed for myself. I'm a trader, okay? And once I knew it was beneficial to me, it was also going to be beneficial to you and others just like you. And again, like my starting out in my trading and mentoring in 1998, 25 years ago, as I say, once I knew the methodology that I had now learned and had turned and was beginning to turn my trading fortunes around pretty quickly, and it needed to, let me tell you, it needed to, and that was made me start teaching and showing that to others. This trading tool was exactly the same. It's beneficial to me as a trader, it's going to be beneficial to you. So let's take a look at it in action. So this is the US dollar again versus the Japanese yen. We're in a 5-minute chart, and you see what it does. If the sum total of buying pressures are greater than selling pressures, it will paint the price bars blue. And look what it done. It picked this out pretty good, I think you have to say, indicating strength. Let's take a look at others. Look at light crude oil. So I'm showing you this across a great spectrum of time frames. 5-minute chart. Here's light crude oil, one of the most volatile instruments, they would say. You Google it in trading. Our methodology doesn't diversify. Our strategy doesn't change. And our software trading tool certainly has a little bit of perfection folk when it comes to this. Okay. So get in on the trade and know exactly where the trade would be wrong. In other words, control your risk. Using this, you will find a very powerful way from which to trade and make trading decisions from. Okay. 15-minute chart. This is the pound versus the US dollar. Great British pound against the US dollar. One of the major currency pairs. Okay. What is the red bars indicating weakness? With blue bars, you can see over here, and green bars. So the market was going a little bit of strength, a little bit of weakness, or sorry, neutrality, I should say. Further blue bars indicating strength. But what was happening here? That high compared to that high, that was a lower high here. All we were waiting then for, once we got a lower price action, it was telling me in a 15-minute chart, we were now in a price action downtrend. I needed to see the red price bars. I got the red price bars. Away we go. What did the market do? It fell and fell and fell. Another fantastic trade. Here's it now in a 4-hour chart. The Australian dollar, AUD, is the Australian dollar versus the US dollar. Again, what happened? The red bars are indicating weakness. A little bit of neutrality here where the market started to go sideways. When the weakness came in again, what did the bars do? Some total selling pressures was greater than buying pressures, and it went down, folks. What a great tool to have in your arsenal to trade. So combining the price action trend with the colors of the price bars the software paints creates a real edge for picking consistently good trading signals. There's no question about that. There is no question. So let's take a look what I mean. So what I've done with each little yellow ellipse, and this is a very recent chart. This is just a chart that I think maybe took a screenshot yesterday. Okay, we're in August of 2023 as this has been recorded. And you can see we come out of red mode. And then we went into green mode. Green mode I call, red mode weakness, green mode sideways, blue mode bullish. So what happened in this first ellipse here? That was a confirmed The third bar here happened to confirm that. It was straightforward. That was a confirmed higher low than any low down here. But we couldn't take a buy signal. We had the price action trend now leading and telling us that we were in a confirmed uptrend. But to create the edge, we wanted to wait until the price bars then had the sum total, because of the previous weakness, we wanted the sum total of buying pressures to be confirmed. And then the bars turned blue. And lo and behold, we got our buy signal here. And we knew then that that was our buy signal once that bar closed. And the stop was going to be in underneath that low. Why was it going to be underneath that low? Because that is a higher low. If that was a lower low, it would be no benefit of our buy signal. But when it's a higher low, everybody, that is where stop is. Because I'm showing you this chart after the event. Okay, this turned out to be a fantastic signal. But when this signal was triggered down here, all I knew and all that I could control as a trader was where my risk was going to be. And my risk was going to be from there, my entry, to there. This market could have given me that signal. It could have given a blue bar. And then the market could have started going down again. And once it broke through that, do I want to be buying an instrument or a foreign exchange pair when the market that had given an indication based on probabilities that it was going to go up had now all of a sudden reversed and started to go down again? Do I still want to be buying that, or what we call in the trade long? I do not, and neither would you. Okay, so this is the power of this. And in case you can see, each confirmed low, each confirmed low, 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 and there the market retraced, but all the blue bars started to go into a little bit of green mode here. So there's a little bit of neutrality was coming into this market. But I can tell you that that market has since moved on a little bit further, started to come off a little bit this morning. Here's the pound Japanese yen. That's the dollar Japanese yen. Here's the pound Japanese yen. Similar folk. What does it start off with? Green bars into blue bars. So this time the bars were blue. What's that telling us? We need to consider buying this instrument. But in this particular instance, although the bars were blue, we hadn't the price action trend to confirm it. We had to wait on the price action trend to confirm it, and providing the bars were still blue or within the blue mode again, then we can take the signal. And this is what happened. The market went into blue bars, it retraced. There's a couple of neutral bars in here, then it went back in to a blue bar. Okay, but we wanted to get a higher low after this. The market retraced, blue bars. And if you can see in here, you might say to yourself, and I'm going to show you a better example. Well, Ian, I know time's going on, folks, so I don't want to keep too long. In here, that's like if some of you that are watching this are saying, well, that's a swing high there. Not on my rule set, everybody. No, you have to always have a confirmed low, a confirmed high, a confirmed low, a confirmed high. And if we could not get that there in here or there as a confirmed low, all right, then we cannot have that there as a confirmed high. So that was our last confirmed high. That was then a confirmed low. The bars were blue, as you can see. We got a buy signal, and lo and behold, up went the pound against the Japanese yen. Japanese yen, I appreciate, has been weak, but isn't it great to have a methodology that picks the trade to perfection, and also at the same time, at the trigger point, lets you know exactly where you should be putting a protective stop? Because once you have a methodology, everybody, everything else around successful trading is about managing risk. But if you've not got a methodology and you do not know why you're buying an instrument or why you're perhaps selling an instrument, how on earth are you to know where you are wrong on that basis? That's one of the big problems with trading fundamental news. You're taking a look at a share today, and they come out with that company comes out with real good news. Okay, so what is the natural reaction you would think from an outsider's point of view? Buy that particular stock. Buy it. Look, here's a company that has made more profits than was anticipated. And what happens? You go and look at the chart, and you see the market has gone down. And you're scratching your head and you're saying, why has that happened? And perhaps then the next thing you read, oh, the price, the good information has been built into the price. In my humble opinion, a load of codswallop. Okay, absolutely. But that company might go into, because remember, the market makers could be manipulating prices, we don't know. But if they are, you only can trade what we see off the chart. So if we then see a higher, if it's a buy signal, and that market's starting to show weakness like this, let's assume, and we then get a higher confirmed low that's a higher low than down here, then we know to buy that because we know exactly where our stop should be. So this is why it's so important. There's nothing wrong with fundamental analysis, everybody, basing on news and looking at stocks and even for currency pairs, because obviously what government decisions are made and what the economy is like will have a reflection on what a particular currency is. But we need to incorporate our technical analysis, which is what this is, a technical methodology that will enable us to, based on probabilities, determine whether there's buying opportunities or selling opportunities. And at the same time, let us know exactly when those opportunities have now changed. Here's the 15-minute chart on the pound versus the US dollar. Pick to perfection, folk, and an 80 pip fall, red bars, lower highs. 15-minute chart again, go back to February. Market falls 50 pips. Here's gold on a 4-hour chart, folk. What have we got? Blue price bars indicating strength. What do we need then? We need a confirmed higher low. We need that low there to be a higher low than this low. We didn't know whether we were going to get that. We know that that spike up there was a higher high than any high over here, but we needed confirmation that now the buying pressure or the buyers of this market in gold were in control. And again, this is a 4-hour chart. So we've looked at 1-minute charts, 5-minute, 15-minute, 60-minute. Now we're looking at 4-hour. We've looked at the dailies. So the same thing, and with blue price bars, up it goes, 1830, $110 higher. A standard contract in gold, $110 might mean nothing to you, and I would totally understand that if you're completely new to trading. But let me tell you what it does mean. On a standard contract, that is $11,000 profitable move. You can go into a mini contract or a micro contract, you can bring that down to $1,100 move or $110 move. Right, we can trade. Remember nowadays for the retail trader, there's great opportunities because you can trade at different levels, just depending on the amount of cash that you have in your broker's account. All based around, of course, controlling that based around risk. But again, we know our risk because if we took a buy signal here and our risk was there, we know exactly where to put our protective stop. US dollar on a 5-minute chart, 5 minutes. Yes. What do you think? Some blue price bars in here. Did we get a higher low to buy that market? No, this is where our price action leads. And then we need, if we get a lower confirmed high, if that had been a higher confirmed low in here, right? If we had got a higher confirmed low, we would have got a buy signal in there. In this instance, if that had been the case, we would have been stopped out, would have been wrong. If in around those lows there, but because that could not be confirmed as a higher low, would have been a higher low with a blue bar, it would have been a buy signal. Because we couldn't get that low confirmed, then there was no buy signal. But if it was, we would have had a small loss, and then we'd have been taken out. That market went down, it reversed up. What is this entry here? That green bar there is a lower confirmed price action high. We know it was exactly confirmed at the entry at the second red bar here, happened to confirm that. There was a few bars in here that didn't confirm it, but this one did. And the entry was at 118.70. At the market moves 50 pips lower. What's 50 pips? At £1 a pip, it's £50. Standard broker taking one standard lot, it's £500 profit. Okay. The DAX, a 1-hour chart, one of the most popular markets. People tell you, don't touch the DAX. It's too volatile. If you have the correct methodology, folk, with the correct trading tools, then you can touch and trade anything you want. Anything you want, okay? Yes, of course, there's a learning process of which we go through because it's a little bit like driving the car. down the road, you're only blinkered when you're going straight. But if you're starting to want to overtake or you want to go round a roundabout, what are you doing? You're looking in your rear view mirror. And it's the same in trading. Before we pull the trade, if I'm trading on a particular market on a particular time frame, I do want to know what the daily setup looks like. I want to know what the hourly is. If I'm not trading off the hourly, if I'm trading off a 5-minute chart, I still want to see what the hourly chart looks like. I'm not trading the hourly, trading maybe a 5-minute, just to give me a little look, to make sure the road's clear. Okay, we do the same, that's all. Here's the S&P futures market on an 8-range chart. Let me tell you what 8 ranges are. The S&P moves in quarter points. 8 ranges or 8 quarters, in other words, 2 full points. I trade in this regularly. What did we get? A buy signal down here? Out of red mode, into blue mode. But although it was into blue mode, we had to get a confirmed higher low. We hadn't got it at that stage. We had to wait for it. But once we got it, price action confirmed uptrend. Blue price bars, we got a buy signal of 39.96. That was at 14:42 UK time in the afternoon. The market rallied for one mini contract, $2,750 move. That was a micro contract, folk, where you need only $50 US to trade this in the margin. Again, I'm not enticing you to trade. I'm only pointing out factual figures out. $277 profit on that move. On the afternoon, look what that was, from 14:42, and this was now, so 20 to 3 until roughly about 4:30 in the afternoon. So literally not even 2 hours, 1 hour, 40 minutes. So I just want to show you this particular chart here to very clearly show you why we use our rule set. In here, you can see a confirmed high. In here, you can see a confirmed low. For those of you that I've said already, touched on perhaps, you would have said, well, hold on again. There's another confirmed. There's another swing high, another swing low. Based on our rule set, everybody, that was not a confirmed trading pattern price action high. We couldn't and we didn't get the setup to confirm that to be a high. And again, this is a chart, 17th of August today, took this morning. The same thing in here. Okay, there's the pound yen. I said to you earlier, we're starting to come off a little bit. The blue bars now, we're starting to go a little bit green and back into blue mode and now into green mode. What it's doing since I've been on this presentation with you, I'm not quite sure. It's a market that I trade myself. I love it because of the volatility. When it decides to move, it decides to move, which is what we want. We want some movement, okay? We don't want something that's reckless. Like, we want something that, you know, when it moves, and we don't want something that does nothing. We want to make money, money, money. So anyway, that is another high that was not confirmed. You may think, oh, there's a swing high. There's bars confirming that. No, it was not confirmed, everybody. It was nearly confirmed. But because the setup here was just not right, we could not, none of those bars. Yes, that low was confirmed up here, but we can't have a low confirmed there and then a low. It has to be a low confirmed, a high confirmed, a low confirmed. Okay, I just want to point that out because the rule set is not about fractions. It's not the normal way you may think, oh, I can get that anywhere. Let me tell you, prove it to you time and time again, you cannot. Okay. So I just want to make it of 2 setup rules, remember, with an A pattern or a B pattern. And that just depends. Around here, when we see a possible high or a possible low, we know then if the bar next to this one that we're trying to confirm, I call it middle finger lows or middle finger highs. The bar next to our middle finger, like an index finger, it depends on the setup of that bar. Okay. So look, time's going on, folks. So I just want to move on here and finish the presentation as best I can. Let me just check where we are here. We're well seen, we're live, isn't it? Because we've now got a stuck slide. We have, there we go. So let's briefly recap. We simply follow the colors of the price bars painted by my Trend Trader tool. And then we use our price action rule for trend confirmation, for price action trend confirmation. So if we get a blue price bar, we then check, are we in a uptrend? a price action confirmed uptrend. If we are not, we wait until we are. Other occasions, we are on a confirmed price action uptrend, but we're waiting perhaps on the blue bars to come in again, as I showed you on some of the charts. And once we get those and once it closes, we pull the trigger. The same thing for a sell signal. We either have got red bars indicating weakness. Once we get the red bar and it closes red, we check the price action trend. If it's a confirmed downtrend, we take the signal. If it's not, we wait until the confirmed downtrend is in place, and then we take the signal, providing the bars are still red. So by doing this, it creates a greater probability of price moving in the anticipated direction. And that is what it's all about. And that is how we create our consistently accurate trading signals. It is exactly how I make my trading decisions on a daily basis. And as I've said, the signals, in my opinion, are second to none. Are they always going to be correct? Unfortunately, not. But if you can come up with a better trading methodology, please let me know. I know of no equals, okay? Now, you can create your own trading success using this trading methodology, professional trading system, by becoming a member of my trading family. And let me just tell you, if you do decide to take that route, what you get. You will get the Trend Trader software, okay? It's programmed for NinjaTrader, it's programmed for TradeStation and MT4. You will get full training on how to implement the software signals in conjunction with a price action trend. The rules that determine when a trend is in place. You will get access to our weekly live trading room, of which I have a weekly live trading room starting not long after this presentation this morning. It will last from 12:30 p.m. until 3 p.m. today. We have our regular group training sessions. And with unlimited email support. But most importantly, folk, I offer unlimited one-to-one training sessions. So here's how you start learning. If you become a member, you will get access to our members area of our website, of which we have 3 modules. And in there, module 1 starts with the basics of price action. Excuse me. Module 2, module 2 is then the rules in relation to our trend trading system. And then I encourage you to have a better understanding and a bit of an understanding of that before we make you book our first one-to-one training session. And by doing that, it means that both you and I get much more out of the first training session. So if you were to join now and didn't watch any of the training videos and had no idea how to analyze and confirm a price action trend, now you don't need to know it perfectly, but just a general understanding, then it would mean that the first one-to-one training session we would have would probably cause quite a bit of frustration for me, and certainly a lot more frustration for you. So it's always good to watch the videos, but I want to warn you, my methodology and my learning process over all of these years is not down to saying, thank you very much for becoming a member. There's a video sequence, go and start watching it, and you're left on your own. You're not. You're very much, we're in a very much handheld scenario from which you would then send an email in, could we have a session, in, I have a question for you, blah, blah, blah. And there's one thing that I always aim to do, and I think I achieve it pretty well, and that is not to let anybody down. If I say that I'm going to do something, if I say I'm going to give one-to-one sessions with you unlimited, that's what you get. Some people need quite a few sessions, others need very little. Okay, I've even had members join me that I haven't even had a private one-to-one session with, but it's there, it's there. Now, you may say to yourself, well, that's very fine, Ian, but what is this going to cost me? Well, the full price of joining as a member, which includes the software, includes our weekly live training rooms, our group trading live training sessions, where we have the group training webinar. It's in an evening time. It is a recorded session. The live session is not recorded. It's normally 1497. But for the purposes of this presentation, I'm reducing that to 1247. Okay, now this equates to £24 per week over the 12 months. Now then, thereafter, there is a 795 per annum renewal fee for the software. Okay, so it's 1247, but you've no other, if you don't want the software in 12 months time, it's not costing you anything. It will not stop you from joining our live rooms. It will not stop you from getting into our group training sessions. It will not stop you from sending me, wanting a one-to-one session. No, it will not do that. So it's a one-off cost, but a 795 per annum renewal license. And let me tell you, I've had nobody yet that doesn't renew the license, because it's so important when you're starting to trade and you all of a sudden have a visual trading tool that paints the price bars depending on strength or weakness. You get so used to it. This brain of ours gets so used to that. So it's 1247. I will put that in the link now. I can put that in the link here. I can. So it is. Will I just type it in? It is. In fact, I'll just copy it. 1 second. I'll just copy the link. So I will. And here we go. Here we go. So if you click on that link, it will be live. That link will be live for the next few days. Okay. For today is Thursday. We'll keep it live until tomorrow or Saturday. And after that, it will not. Now, you can spread, if you're a UK customer, my merchant provider is PayPal, and they do offer a 3 monthly payment plan, which equates to £415 per month for over 3 months. So that is obviously subject to meeting the merchant provider conditions. But if you have an interest in that, certainly try and take up the offer. Okay. But remember what you get: the one-to-one training, the software, the live trading rooms, the live group trading sessions or webinars. It's a package second to none. But most importantly, by following the rules, everybody, you will have a methodology that will consistently create accurate trading signals for you. So it's a whole learning process, but be prepared to learn and take time to learn the rules of our A and B confirmation setups. And if you do that, folks, then you're on the way to win. And let me also tell you this: what I should have said, I can tell you it's not subjective. And what that means is that if you are trading on a 15-minute or a one-day chart or any time frame, and I'm trading the same instrument on the same time frame, it's impossible for you to have a buy signal and me to have a sell signal. If we have the same data set coming in, it's impossible. In other words, if I have a buy signal, you also will have a buy signal. If I have a sell signal, you also will have a sell signal. It is not subjective. In other words, it's not that I'm getting a buy signal here. Ian, you said you got a sell signal. If you're trading the rules, of which you will clearly learn, that cannot happen. Okay, but look, time's gone on. I want to thank you all very much for your time. Remember, it's Ian at Be a Winning Trader. I'll just put that in if you want to, if you would like to contact me. I spell that wrong. I did not. I knew I didn't. That's my email address, Ian at Be a Winning Trader. If you have any questions, please do. Or if you want to book a one-to-one Zoom call, send an email and I can give you a personal, we can have a 30-minute call together from which I can answer any questions. So just before I go, Renee. Yes, Renee, as I've said, the software will work on all instruments. ETFs, yes, it will work on ETFs. Yes, it will. And for those of you that do not know, an ETF is just an exchange traded fund, just where you have a basket of particular shares that's put into a fund. It still works. Anything that has got a trading chart attached to it and moves up and down and can be which everything most can be graphed. In other words, in a package, then the software will sit on top of that, and it will determine the buy and sell signals. Our methodology, of course, it will determine a price action trend no matter, and the software will do the same. Okay. Look, thank you all very much. Any other questions, folk? Thank you for your time. It's been great to have so many of you in the room today. Thank you, and we will catch up soon. All right. All the best now. Thank you very much. Thanks.